Hey, good morning, everybody. Welcome to another daily market report brought to you by Mike Bjork. Today is Hump Day. It's Wednesday, October 15th. Hey, sorry for the early reporting here this morning. Usually I kind of like to do it a little bit later in the morning to kind of get more of a pulse of the market, but we have my company's having a summit this morning, or today, all-day event, so I want to try to get this out for you folks to start your day before I head out there. So we got a lot today to go over. We got retail sales for the month of September. So back in August, back to school, it was up 0.6%. Good numbers there. It was supposed to come down in September to negative 0.2, and it came down negative 0.3, worse than expected. And if you exclude the autos, which are the big ticket items, they can kind of obscure the numbers in there. We have August 0.3% increase. So we figured we'd keep that because last month, the last reporting came in, the autos had a good sales, and actually even came in worse. So it came in at negative 0.2% versus going up 0.3%. So first time in about 8 months we've seen retail sales drop. Producer price index, we had a 0. This is basically inflationary numbers on the wholesale side. These are something we would like to keep an eye on, but it's not like a high impact, primarily because sometimes when the cost of goods on the wholesale side of things don't always get passed on to the consumer, we look at more what the consumer's inflationary level versus the producer, but it gives us a gauge as to if it's going up, could it possibly go over there. So we had a 0%, and we figured it was going to go up a little bit in September. It actually came back, it contracted in the month of September. And then Empire State Index, this is the manufacturing numbers in the New York region. So we had a 27.5 in September. Forecast was supposed to remain in the 20s at 21. It dropped all the way down to 6.2, almost came to a complete stop. So anything below 0 is contraction, anything above is expansion. So very modest numbers in the month of October so far. So then later today we got the business inventories, not a high impact. It just kind of gives us a gauge as to if companies are stocking up to maybe increase their employment, increase their numbers. So this kind of gives us some gauge as to potential job numbers in the future. So in the month of July, it was up 0.4%. For the month of August, the forecast is 0.3%, and the number will be out a little bit later on today. The Fed Beige Book, this will be due out 11 o'clock Pacific Standard Time, and this can be a market mover depending on what it states, but it's expected to say, kind of paint this rosy picture of where the economy is moving upwards in the U.S. So it'll be interesting to see what comes out in it, and if there's any surprises, you can see more volatility in the markets as a result. But it can be definitely a market mover. Currently, the stock market's down. Actually, the Dow is down quite a bit so far this morning. It was at over 200, down over 200 points so far this morning due to the bad economic data that we just went over here. So as a result, the bond market's rejoicing. We're up even above 104. We're up 24 basis points from where we left off yesterday. So good numbers so far this morning for interest rates, which means the bond market goes up. That means interest rates come down, so that's good for us in terms of better financing terms here. All right, folks, you guys have a wonderful day. Thanks so much for watching. We'll see you guys tomorrow. We do got a bit of news the rest of the week here, so stay tuned. All right, take care and have a great day. Thanks for watching.